Hi guys. Now we gonna go over lesson 7, which we're gonna talk about Bollinger Band and envelopes, but we gonna go in more detail about Bollinger Bands. And Bollinger Bands they're a very interesting subject, and I used to trade using Bollinger Bands a lot in the very early age on my trading strategies, but I don't do it anymore since I think, in my opinion, that Bollinger Bands it's more reliable for day traders. It's a very powerful indicator in day traders arsenal, but for swings, yes and no. But like I said, let's go over this and you'll get the point. Okay. So, quick disclaimer: this channel do not intend to replace any trading and coaching programs. It is a deep introduction to the world of crypto trading, technical analysis, and stock trading. The series of this channel must not be considered as financial advices. Our contents are only here to educate, inform, and entertain. Trading can be very risky. Only risk money you can afford to lose. Now, you get the book, guys. I promise you that, because I'm doing the record and the book at the same time. So, Bollinger Bands and envelopes. Bollinger Bands and envelope in standard presentation, these are two indicators that are built around the 20 MA. Now, pay attention to this. For an example, moving average conversions divergence is built from exponential moving average, but the Bollinger Bands and the envelopes, they are built around the moving average. It's a different type, slightly different, but it's the difference is mainly in the algorithm. So this is one of the reasons why I don't really use Bollinger Bands anymore, because I use moving average and a sets of indicators that are more in accordance, if I can say it like that, with exponential moving average. But like I said, we're not gonna get into detail for me Bollinger Bands but and envelopes, but like I said, this is a very popular indicator and lots of traders use them, and I personally think it's a very powerful indicator for day traders. Now, they both have upper band and lower band. So as you can see right now, this is a Bollinger Band, and this right there is an envelope. Now the envelope, it's more static. It's just 10% over. Let's see. This is the upper band in the envelope, and then this is the lower band, and this is the 20 MA. Same thing for Bollinger Band. You have the upper band here, lower band here, and then the 20 MA. Now envelope is more static. They are easier to understand and you'll get it, but they really look alike, but the difference is mainly in their algo, the way that they are built, the way that the computer make their calculation. Now envelope, very easy, consists of a range around the moving average. Is pretty easy concept. Okay, in standard, envelope have an upper line which is 10% higher than the 20 moving average, and a lower line that is 10% than the 20 moving average. That's the reason why it's more just like a clear a band. There's no real contraction. For an example, you're gonna have contraction, that's a contraction zone in Bollinger Band. You don't really have that in envelopes. So when Bollinger Band start being more used, people tend to give up on envelope, and I personally don't really know any traders that are using it, but I bring it over because I want you guys to make the difference and understand they use this one to develop a better version that we now use as Bollinger Band. And some of you probably have never heard about envelope before, because some exchange or trading or shorting services, they just don't bring that stuff anymore. But it is good to know based how it's built, the idea. So for an example, this is the envelope, upper band, lower band, 20 moving average. So 10% higher than this, you get this price here, and 10% lower than this. Pretty simple. I personally don't find this indicator not reliable because it's static. It's too static for me. Some markets are quite volatile, and crypto is a big one. When it comes to volatility, crypto is a big one. And since now stocks is everywhere, and when I used to start trading, not everybody has access to stock trading. It was expensive. You had to have $10,000 at least to start. But now, any 18 years old can open a Robinhood account, and you can trade stock for free. I mean, when I started in my early age, when I was learning that stuff, it was quite expensive. You're gonna have to put that money down, because put at least $10,000 at risk. Imagine starting to learn trading, and upfront you have to risk $10,000. That's how it used to be before. Now I mentioned it because the concept looks similar, and it is important to know in order to not misinterpret Bollinger Band and envelope. Yeah, since if you guys are reading whole books, for an example, you might be tend to think they are the same thing, and that's the reason why I had to go over the envelopes first, so we can go ahead and understand Bollinger Band in a deepest way. So now let's go into Bollinger Band, which I think this is a great indicator. No, for real, even if I don't use it anymore, but day traders gonna love that stuff, and I know that for real. Now Bollinger Band consists of an upper band and a lower band, standardly built around the 20 moving average, which is not just 10% up, 10% down. The expansion of the band are calculated using standard deviation. Now if you know about statistics, I'm not gonna get into these details, but you know what standard deviation is. Standard distribution. That kind of stuff. This is all about statistics, and then you can do some research about this and learn more about that, but this is more stat stuff. It is a lagging indicator that consider the candle close. You must always keep that in mind. It's a lagging indicator, just like moving average. Okay, it's not a momentum. It reacts to the volatility. Big volatility, large band. Small volatility, small band. And that's how you get what we're gonna call contraction on Bollinger Band. Contraction. Okay, so the envelope does not really consider that volatility element in the market. So that's why Bollinger Band is now more used, and quite honestly, it is more interesting, especially that almost every single market now are being very volatile overall. On the big time frame, Bollinger Band tends to be less sensitive, and that's probably why, as a swing trader, I'm not really into Bollinger Band because of my trading style. But if you're scalpers, day traders, you're gonna find this thing very interesting. Now this is a big one daily time frame. The price is not important, so you can see here you got the upper band, lower band, 20 moving average. Same thing here. It's not just 10% up, 10% down. The upper band and the lower band, they literally behave differently, depends on the market volatility. For an example, you can see this is literally larger than this spot right there, and same situation here. So it's not a straight line, just like the envelope. If you're using TradingView, you can go ahead and change this element, which is literally the moving average, and then some stuff you can do, but this is what I wanted to show you about the standard deviation. So when you play around with this, you can actually influence how the algorithm calculate the upper band and the lower band. So these adjustments are made by traders that are specialized with Bollinger Band, so they can go ahead and use their Bollinger Band as way to be sensitive to signal that they are looking for. So For an example, some traders, they also, just like the swing traders, they choose to stay in one side of the market in the sense that they only perform one action at a time. So I know day traders, they wake up in the morning, they be like, I'm going long only. So sometimes they go ahead and set up their Bollinger Band, just like you can set up your MACD, to react better for a bull day, or a bear day. But this is very detailed, and it's all about day trading. Like I said, day trading style. Okay, now a good practice when you use Bollinger Band on a particular strategy. This is what I think. Make sure your upper band and lower band share the same color at the direct time frame, just like we use color into a time frame for interpretation. But the 20 MA must keep its color orange in our case, because it's the 20, so we keep it orange. You can do it once you're done with the class. Like I said, feel free to build the rule, and I strongly encourage that you build your own rules. On the part 3, we're going to integrate Bollinger Band trading strategy. So we're going to associate it with other indicators from different algorithms. Things, these are the type of thing we're going to use to catch interesting swings. But I'm going to give you an example in this. There's one example in the book, but we're going to keep the video short. I try to stay under 1 hour as much as possible. Now, interpretation principle. When the bands narrow on consolidation zone, it is often followed by a brutal change in price or breakout. This is what makes it a day trading treasure. It is very useful to identify sideways market zone. Why? Because so far, Bollinger Band is probably the only indicator that we have a clear way to identify a sideways market. You can go in all the previous video and you realize I always tell you that sideways market is the weakness. Signs are confusing in sideways market. You realize that I always say when it stay away in sideways market, but in Bollinger Band, and that what makes it a big one in day trading arsenal. Sideways market is clear on Bollinger Bands. This is one of the indicators that just give you one way to identify a good sideways market. Now, just like I said, day traders love that stuff, and because honestly it works for them. And for an example, you start having the more volatile the market, the bench get very large. See that? But take a look at this zone right there. That was a sideways movement. You have a contraction. You have a contraction. And when we get it very close to the break, you get more and more contraction. See what I mean? So day traders, they love that stuff. See that contraction? We are contracting until we get very close, and then boom. This is interesting. I'll get you another example. You have a clear, the bands get really, really, really small. It's not wide at all, and then boom, it's just contraction like this, contracting, and then boom, we spread. Okay, same situation here. Amazon daily time frame, contraction, and then boom, same situation. These are contraction and then breaks, same situation. Now, interpretation principle. These are, let me check real quick. Okay, so we are going to interpretation principle. This is principle number 1. This is principle number 2. After a breakout, if the price exceed the band, the price is expecting to continue. This is interesting. This is one of the things that make Bollinger Bands very particular, because there is no real indicator that I know that can tell you how strong a break is. So some breaks are fake breaks, but Bollinger Band is one of these indicators that can actually tell you, oh well, we got a breakout, but is it a real one? When Bollinger Band will literally show you this by there is a clear sign in this. By exceed, I mean you have at least one candle that open and close outside the bands. Let's go some example. So you have a break. Okay, you have a break. I don't know if you can see it, but that was the first candle. Let me see if I can get this example. Is not very clear. This example is not very clear, but this right there is the first candle that managed to open and close in the outside of the band. So you know that this break is healthy. So you get this break, you know that even if you don't retrace that much, there is a very high probability that this trend is gonna keep going up. You see that this break right there after lots of contraction, probably a very long contraction. This is March 2019 and 2018. Let me see if I can recall. March 2019. I think this is still a bear market because I don't have the price here. But here's the point. You get that break and then you have a candle right after this one that open and close outside of the band. There is a very low probability that this break is a fake one. Okay, now always keep in mind overall trend. Overall trend. Okay, overall trend. For an example, we are in a 4-hour time frame. If you are bullish here, you have bullish here, you see that in 4-hour time frame, that's a long. You gotta take a long. We're not gonna when I'm talking right now, I'm gonna be less specific if I know that I talk about it in the previous lesson. Sorry. So that's another situation in which we're going down. You have a break candle that open and close outside of the band, and then you have a continuation. Small contraction here. Okay, break, we open and close, and then continuation. Same situation. Go ahead, you can pause the video and watch those examples very closely. And then the interesting thing about this chart is, have you realized that no candle ever stay in this upper band? No candle ever even close in this upper band until we get point of contraction and we finally do it in the other side. This is an interesting thing, interesting situation. Same situation on Bollinger Band. The chart is more important than the asset name and the price because we want to use visual and lots of patterns so that you can identify it. But this example is more interesting because now you can see you have a candle that clearly open here and close outside of the band. It can get seen, but that break right there is a healthy break. Okay, now the question is, you'll be like, well, what about this one? What about this one? Now the overall thing is that this is the swing. Okay, so the reason why you will have disclosed this candle, like I said, is to always keep in mind overall trend. See, I have this break right there, and I say, well, let's say that we are bullish. Okay, we are bullish. I have this trade right there, and I'm like, you take a long and you see this. Now, should you close the position? Now, if the overall trend is still bullish, then you're gonna disclose that part. See what I mean? Because in a bull trend, bull signal are more important, and a bear trend, bear signal are more important. And there's a lot of traders who actually don't realize that you should disclose them unless they are a set of signs that tells you about reversal. And I think we're gonna have a nice example in this presentation right there. So that's Ethereum 4-hour time frame. See that nicely, breaks, confirmation, drop. All right, this is another example. For an example, this candle right there, you got a break, and this sets of candle is a confirmation. that can tells you that this break is actually an healthy one. So this is supposed to be a downtrend line, so we would focus on this, on these two indication would have be a situation for you to enter a short position and then ride this and ride it all the way down. Now this is another example, same situation here, this candle right there, and this candle is an indication, but remember this is a downtrend. This is a downtrend, so we pay more attention, if we can say. We do not use a Bollinger Band to do trend study, so we are in a downtrend. This would have been non-validated, but definitely this one like there, okay, this one would have been a situation for you to enter a trade. Now you will realize in some rare case the price exceed the band without continuation. That's important. It is generally happen against the major market trend. Now it can in some case be a sign of reversal, which will lead us to the third principle. Now generally I do not use one indicator for reversal. You probably realize that by now. So we can see a situation in which we have a price that exceed the band, but you don't have a continuation. So you're gonna have many way to kind of look for a confirmation for reversal. Now interpretation number 3: when the price action create a reversal pattern after it has violated outside the band, it is a great sign of reversal. All right, so I will give one case, and like I said, you're gonna have way more example on the book. All right, so that will be an example in which this is forex right there, forex and US dollar and Japanese yen. This is a situation in which we did go over and open and close outside the band, and then we get back into it. Now when I see this, my based on the principle number 3, I'll go ahead and look for other signs of reversal. And what we got here is pretty simple. We got a head and shoulder, this one right there, a break, a trend line, an uptrend line that have been broken somewhere here. So you have many indications that this is actually a reversal. So that would be a big indication to enter a trade. All right, so here you go, head and shoulder, uptrend line broken here, and retest of the uptrend line. So it is very interesting to associate Bollinger Band with a live and momentum indicator, especially like RSI is a big one. This help on the interpretation of the trend continuation. The exceeding of the bands associated with divergence on indicator like RSI is, like I said, is a good example. For an example here, look at this divergence right there. Okay, so in a bull market, for an example, maybe somewhere before the reversal here, you're gonna have many signs of extreme overbought, and some situation you're gonna have diversions. But when you have a set of sign that tells you about the reversal, for an example, head and shoulder, that's one sign, and uptrend line broken, that's second one, the Bollinger Band, that's 3, and then this right there, these diversions here, that's 4. This is a situation in which you need to consider a reversal. Okay, now this is the end of this lesson, and a quick disclaimer: this channel do not intend to replace any trading and coaching program. It is a deep introduction of the world of crypto trading. The series of this channel must not be considered as financial advices. Our contents are only here to educate, inform, and entertain. Trading can be very risky. Only risk money you can afford to lose. Alright, guys, and after that, we're gonna go ahead and talk about lesson 8. See you. Bye. Take care.